Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that so many of you are here live to kick off the trading week. Today we are going to talk about long calls. And the reason we're doing long calls is because there was a survey Friday in Friday's class. We teach this class Mondays and Fridays at high noon Eastern. And somebody said, I don't have approval to do verticals. And you do a lot of verticals in your class. So could you do some long options? And so today we're going to do long calls. We're going to focus on a trading strategy called a long call with a 1 ATR target. And so if you're not quite sure of what that is, you'll understand it by the time we're done. I've got, 5 or 6 trades I thought we could look at. We certainly won't have time to put them all in, but we're going to look at both this strategy and conditional orders as they might apply to this strategy. And so what do I mean by a conditional order? Well, if you're not sure about that, you'll have a better understanding of that momentarily as well. So I want to thank Connie Hill for being with us in the chat. I'm going to formally invite you to follow both of us on X if you aren't doing so already. My handle, Barb Armstrong CS, Connie's Connie Hill CS. Connie is great. She understands this strategy inside and out. In fact, she teaches a class dedicated just to long options on Thursdays at 3:00 Eastern. So if you like this strategy and want to learn more about long options, you may want to join Connie on Thursdays. So, and I want to thank you guys who are so robust in the chat and who often get here like 20 minutes ahead of time and start kibitzing with one another. I think that's fantastic. So hello to Priya and AP514 and Krishna and Ken and Jim and Kevin and Gary and Austin and AP514 and Backroad Bob. I love some of the handles. And Rocky and Phil and the rest of the gang. Thank you all for being here. I will go back and look at the chat sporadically. So if you've got questions, please don't hesitate to type those in. Okay, so let's get through our important information so that we can get out to the platform. Know that options carry a high level of risk and aren't suitable for all investors. You also have to meet certain requirements in order to trade options through Schwab, and not all will qualify. I already alluded to that. And it was something that really frustrated me when I first started because I didn't have approval in some accounts to trade spreads either, which I thought were a pretty conservative trading strategy. So I found out what I needed to do and was eventually able to get that. And it's not saying that everyone, will be able to do that. But you can call Schwab and have a conversation with them. And if you haven't applied for option trading privileges, you may want to do that. Also, the Paper Money software application on the Thinkorswim desktop is the platform we use. It is a brilliant place to learn and hone your strategy and make sure that you understand it. Okay. So that's that. Know that past performance doesn't guarantee future results or success. Don't we wish it were otherwise? And there are some nuances and differences between paper money and live accounts, and we'll discuss those, as appropriate. We started this class back in November of last year with $20,000. Our kind of guidelines are that we don't want to risk more than $500 on any one trade. Our max position size is 5,000, and our focus is on shorter to more intermediate term trades. We don't do a lot of long-term trades, although right now we own several stock positions, which is a bit of an anomaly for us. Some are stocks with trade target, some are buy right covered calls where we've both bought the stock and sold the covered call at the same time. We aren't going to talk a lot about those today, but we do have several of those in our account. And even though, you may think this is insane to have a $5,000 position size on a $20,000 account. We did that so that we could do strategies like a buy right covered call. If you had $1 million account, it's not likely that you would choose to put 25% of your portfolio into one stock. Your guideline might be a max investment of 5%. And similarly, you might not want to risk 3% on any one trade. It might be half of 1%. With smaller accounts, sometimes in order to place a trade, we felt that we had to make that risk a little higher. Now, mind you, that risk hasn't changed over time, and we now have, an account that's over 40,000. Right now we're sitting at 43,679 or 680. I mean, we're live in the markets, which is extraordinary. This is the best year we've had in this class, and it's certainly not typical. And you may think, wow, did she just throw out the losing trades? No, we've had some whoppers, let me tell you. But, we try to trade conservatively in that we're managing our risk. If we're wrong, we want to get out quickly. Okay, so let's have a quick look at what's going on in the markets and then overall, and then we'll get right down to business. So here's the S&P 500, hit a new all-time high on Friday, pulling back a little bit today, but still, you need binoculars to see the 100-day moving average from here. It's above the 30 and still above the 10 even. Yeah. NDX, our NASDAQ, this is our tech heavy index, no financials, that hit a new all-time high on Friday, pulling back a little bit today. Is this surprising? No. And the Dow, this has been kind of consolidating, but it too hit a new all-time high last week and then has been kind of pulling back. Oh, let me just change my drawing tool here. Kind of in this, I'm not being super specific. You may want to bring that down just a little bit, but it kind of went up and then it's been consolidating a little bit. And then what about our small caps? The same kind of thing, right? We've got a bit of a bull flag happening there, but within the last couple of weeks, this too has hit a new all-time high. Okay. And then Ford Checkout is asking if we can share an Excel sheet for this calculation for managing a small account. I don't really have an Excel sheet, although there is, if you go to the registration, if you go to schwab.com, and let me just bring that up. So if you go to schwab.com/Schwab coaching, this is where you can see, and I'll just bring this tab over here. So this is where you can see all the webcasts that we teach all day long. And so you can see we're on trading a smaller account. If you click on that, there is under resources, a link to a trading journal. And so if you want to track your trades, and I do highly recommend that you track your results. And this, I'm sure there are lots of other trading journals out there that you can find, but this is an example of one. And it's based in Excel. So you may want to consider that, using that. But, our guideline is, and sometimes if you have a bigger account, this account has grown substantially this year, you might say every quarter, I'm willing to risk 1% or 0.5% or whatever your number is. You could say, well, at the beginning of every quarter, I'm going to take a look at what the account balance is, and I'm going to set my max risk based on my account balance at the beginning of every quarter, or you may do it based on the beginning of every week. You can do it however you'd like. Okay, so there's our Russell. How's the VIX looking? This is our volatility or fear index. It's still pretty low at 13.7. So, this, means that sometimes options are a little more affordable. So it's not a bad time to be buying. Yeah, the rules for the small account, they're pretty simple. Well, yeah, they're pretty simple. Okay, so let's come and look at, let's start with Microsoft. And the idea here, and now I have a 1 ATR bar on my chart here. I have this indicator on my chart. If you don't have that on your chart, you can come to studies and you can come to edit studies and then just type in ATR. In fact, it's so close to the top, you don't even have to type it in. And then you're just going to add selected, hit apply and okay. Now I already have this on my chart and you'll notice it says ATR 14 Wilder. So this 14 means, and if you want a more full definition, you can click on this little question mark and it will give you a pretty complete definition of what average true range is. But basically the Coles Notes version is that this represents the amount this stock has moved from top to bottom, from the high of the day to the low of the day, that range over the last 14 days. Now you'll see at one point it was pretty high here when the stock was falling. It was up around $10.70 a share. Right now it's at, $7.72 a share, which means that on an average day over the last 14 days, from the high to the low of the day, it's moved about $7.72. And if we're playing kind of I Spy, and I posted this on X the other day, that does anyone else see this pattern, this double bottom pattern? And so a technician might say, okay, this has a range of about $34. So I might expect as a technician that this might move up by $34, which would give you a target of, 474-ish. But what if we said, hey, the average true range here is $7.72. It's broken out, and whatever today's high is, what if we just add 772 on that? We're not looking for it to go all the way to the target. We just want a little win. And our expectation is that we're going to be in this for a short period of time, often less than a week. Okay. So how would we set that up? And what's one of our concerns? Well, one of my concerns is, can we afford it? Because we don't want to risk more than $500. And this is a $446 stock. So these options they're not going to be cheap. So let's come out to the trade tab. And we want to come out to January when we're buying an option, even if we think we're only going to be in it for a week, we want to say, okay, I'm going to take 20 days at a minimum and then add the number of days I'm going to be in. So, we might be able to go to January 3rd. That might work. We're going to have more volume typically on the monthlies, but this is such a heavily traded stock. We've got hundreds of contracts even out here 25 days out. But our first strike, our at the money strike is $10. Our first strike in the money, our at the money strike $7. So we'd have to go to this strike out of the money, this 455, because how much could we lose? We could lose all of it. So can we afford to buy a call? We could take that much risk. And so for this one, these are our 1 ATR examples. These are all going to be bullish. And so our first one is Microsoft, and the 1 ATR on this is 772. So 772. And so our target on this is going to be today's high. Now depends on what your trading plan is. You might say, I'm just going to go from whatever it's currently trading at. And others might say, I'm going to be a little more aggressive and go for the high of the day. So that would be 448 because the market has been so bullish. 448.33 plus 772. 446. Let's go up higher. Okay. So we're at 448.33 plus 772. I'm going to get my little calculator going here. I did calculate this earlier, and yeah, the stock has moved plus 772. 456.05 will be our target. And feel free to check my math, because we both know I have made mistakes in the past. And then our low of the day is 440.50. And we're going to subtract 772. $440.50 minus 772, $432.78. Okay, so somebody's asking where I got the 772 from, and it's from this indicator down here, this 1 ATR indicator. And if we look at over on this right-hand side, it says that the average true range currently is 772. That's the ATR for today. Yeah. Okay, now, so we have our target, we have our exit. Now, how do we place that trade? Well, we're going to come out to January 3rd. We're going to come to this 455 strike. We could do buy custom with OCO bracket. I'm just going to put in a buy order and then come down to advanced order, first trigger sequence, right click, and create an opposite order. And this is just a different way of putting in my OCO order. I'm going to make it good till canceled. And then when I click on the appearing sprocket, it brings up my conditional order entry. I'm a big fan of always do things in the same order. So the first thing I'm going to do is put in the target, 456.05, 456.05, and then I'm going to put in the exit, 432.78. Now, is this a set it and forget it kind of trade? Absolutely not. We are going to go in after the market closes tomorrow, and if it hasn't hit the target, we're going to snug up the stop. And this is such an expensive stock. We might say we're going to move it up to $2 below the low of tomorrow, because it's you know, a $450 stock. Now, if it was a $40 stock, we might make that number 20 cents. Okay, so we're going to confirm and send. We are going to go back and review this. So we're buying a call because we're bullish, right? Right. How much could we lose? Everything that we paid to get in. Now, although it's saying that our max profit is infinite, we're just looking for a base hit. Okay. And so this base hit is, if this goes above 456.05, it's currently trading at 446. So it's about $10 above. Check. Or if it goes below 432. Does that make sense? Makes sense. 432.78. We're putting this in our long call group. Now, last week we did a long call on Reddit, and we also bought long stock. It hit the target on Friday, but it looked like it was pulling back to me on Thursday. It did pull back on Thursday, so I exited the trade. I did a mini session on that. That posted on Friday. So if you want to go back and look at that, that was on Reddit. Okay. And that was a swing trade. So this is a 1 ATR target. So that if we're going back, we're going, oh, why did we place that target there? That's it. But these are to be managed daily. Now, I also created an example trading plan, and I want to show you how to access that. Here's where, you know, I can say, hey, if you've not subscribed to the channel, you're going to want to hit that button in the bottom right and subscribe to the channel. When this page first comes up, Trader Talks on YouTube, it will show you what's currently playing or what's up next. When you come to playlists and then come down to the trade management mini sessions. So here's the one on Reddit, and somebody said, couldn't you put the ticker symbol in the title? I've asked and the answer is no. But if you click on this, I will tell you what stock we're talking about as soon as I start talking. And this is one where we compared a stock trading strategy to a long call trading strategy when you have a target. And that was on Reddit. And then here's an example trading plan for a long call with a 1 ATR target, which is what we're talking about today. And it is very specific, but it is an example trading plan. So like I said, maybe your target, you want it to be from the current price, not from the high of the day or low of the day. So you can make this trading plan whatever you want. This just kind of gives you a framework from which you can work. And this is the framework or the example trading plan that we're using for this class. Okay. So there's our first one, Microsoft. Now, let's go look at SMCI. So SMCI, it's still up 63% year to date, and yet in the last 6 months, it's been downtrending. They had some issues where I think upper management was being charged, accused of fraud, and apparently they've got, some clarity, and these guys have been, they've dropped those accusations, if I understand the press correctly. So what we've seen is this has really moved up quite dramatically. Like it's gone from 17.25 up to 46. So, it's more than doubled in price. And it's moving up again today. Now, we have earnings coming on the 19th. And so we want to be out of this before earnings. So does that mean our expiration should be before earnings? Not necessarily. But we're going to put that in our notes and we're going to track it. But we're just looking, it's now back above the 100, above, the 30, above the 10, and has moved up quite nicely. And we've got this diagonal resistance break. And so we're just going to do could it move up like a 1 ATR move? And this is interesting because it's a $40 stock and the 1 ATR on that is, 436 or 437. If we call it 437. So if we want to do this as our second example, SMCI, and we say, okay, the 1 ATR on this, that's a 10% move. That's how much this thing has been moving. So it's been quite a volatile stock, which means likely that, our options are going to be a bit more expensive. But our target on this is going to be today's high. And so if we hover over today's candle, that high is 48. Thank you, market, because that makes it easier for me to do my math. 48 plus 437. So that's 52.37. And then our exit is going to be our low of the day, 44.40 minus 437. And that math worked out kind of nicely too. So 40.03. Okay. So again, to put this in, we're going to come to the trade tab. We're going to come out and look at, either do we have enough volume on these weeklies? We do. We've got hundreds of contracts. Do we have a tight bid-ask spread, about 15 cents? So, we could do this 47 strike. We could buy this 47 strike. And single order, first trigger sequence, very, do things in the same order every time, then you're less prone to make mistakes. Now, are mistakes still possible? Well, I demonstrate that they're still possible with more frequency than I would sometimes like. So yes, mistakes are still possible. So we're going to put in our target, 52.37. We're going to put in our exit, target always first, exit, 40.03. Okay. Now this one, because it's a $50 stock, you might not snug it up tomorrow after the close if we're still in it. And to $2 below, you might say, I'm going to make this 20 cents below or 50 cents below. You know, go and look at that trading plan. Okay, so we're going to hit save, confirm and send. How many of these are we doing? One. Why only one? Because we don't want to risk more than $500 to $550. And yes, the volatility is super high. Bill noticed that. Good eye, Bill. But you know, it makes sense. Like this is, we just bought a $5 option going one strike out of the money on Microsoft, which is a $400 and some stock. We're now paying more for the at the money strike on a stock that's trading at $46. You know, so what does that mean? Well, if volatility stays high, you know, and we've got earnings coming up, which is probably exacerbating the volatility issue on this stock. But, you know, that it's not necessarily a reason to either trade or not trade something, but we know that this has a big swing in an average day, one ATR. And you know what? Some people will read this out loud. I am one of them. So I'll look at this and go, I'm buying a call because I'm bullish, right? Right. I'm paying $480, right? Right. I want to sell it when it goes above 52.37. It's trading at 46.45. Does that make sense? Yep. Or below 40.03. Is that below 46.48? Yes, it is. Okay, that makes sense. Fire in the hole. Okay. Yeah, somebody's saying, is there a way we can see upcoming earnings? And yeah, if you go to Market Watch, it's on that tab. Just do some exploring. Okay. Yeah. Okay, somebody's saying, yeah, SMCI was over 500 last year, but they did a stock split, a 10-for-1 stock split. So, you know, if you take that, it would be at 460 if they hadn't done that stock split. Okay. Okay, so now let's go look at, which one should we do next? Let's do Walmart. And I'm going to pick Walmart or PayPal. Let's see. PayPal. Okay, so PayPal is hitting a new high today, and it's had quite an extraordinary run, right? Like since, you know, it's up 47% year to date, but, you know, since the end of July, this thing has really run. You know, up 64%. And it looks like, you know, it's continuing. And so with this one, but this green candle means that it went up to 93.66 today. It opened high. It opened at 92.25, but is currently trading at 90.35. So when you talk about rules, there are some rules we don't break. Our position sizing rule is a rule we have chosen not to break. But could we massage some of our rules? Could they be more guidelines? So when we see it's a bullish candle because it did gap up on the open, but maybe with this one, we say, hey, it's currently trading at 90.36. The ATR on this is 217. You know, we could make our target just for it to go back up to 217. Okay, so you know, let's on this one do one where we're massaging our target, and then one where we're going to put in the target as we usually do. So we're going to come here to our PayPal. So do you understand what I mean by this, guys? So our ATR is the same regardless. It's, you know, call it 218. And then our target, so our regular target would be 93.66 plus 218. 93.66 plus 218, 95.84. 95.84. And our exit is going to be today's low, 89.94 minus 218 minus 218. I'm just typing this out so you guys have a bit of a cheat sheet, if you will. Thank you for checking my math, AP 514. So gap up means that today it gapped up on the open. So it opened here. It opened at 92.25 and on Friday it closed at 89.88. So it opened $3 higher. It gapped up above Friday's close. That's what I mean by gap up. Okay. So we've got our target and we've got our exit. So our second scenario on this one is instead of a target, instead of of target above based on today's high, we're going to base it on the current price. And so that would mean our target would be based on 90.35 plus 218. And so 90.35 plus 218, 92.53. So it doesn't even have to go back to today's high to reach that second target. And so the first target is a little more bullish, isn't it? But it isn't to say that one is right and one is wrong. So Jeffrey's asking how we determine the date, and it's based on how long we think it'll take to get to the target. And with this strategy, it's generally days. So if we say we think it'll get there within 7 days, then we want to add 20 to 30 days to that time, at least 20. So if we come out to the trade tab and then, sometimes like with PayPal, we have hundreds of contracts and we have a tight enough bid-ask spread. Sometimes the weeklies don't offer enough liquidity for it to be viable. So then we would come out to the January 17th. We'd come out and here we've got thousands of contracts. And, we're going to pay more for the option. But, when we look at this, the 92.50, well, here we don't have a 92.50. They're single options, but the 90 is $3.10. Here, the 90 is $4. So we're paying more for it, but we're in it. We've got more time for the stock to make the move. Does that make sense? Okay, so there are a few things that go into that decision-making process. And so with this one, let's say we want to come out to January and we say, well, we don't want to risk more than 500. We're going to do 2 trades on the same stock. So we're going to pick this 92.50 strike, which is a little less expensive. First one, we're going to buy. And again, we're doing it the same way. Buy single order, first trigger sequence, right click, opposite order, market, good till canceled. And our target on the first one is 95.84. 95.84. Our exit is if it goes below 87.76. Now, are we going to manage these differently? No, we manage them exactly the same way. 87.76. Save. Confirm. Is the target higher? Yep. Is the exit lower? Yep. Long call. And this is a 1 ATR and compare to the other trade where ATR is based on the current price. Okay, this is just a note from us to us. So if we're looking at it and we're saying like, what? Why did we do that? So now we're going to do another one, same stock, same strike, right click, or sorry, single order, first trigger sequence, right click, opposite order, only this time our target is going to be different. And our target on this next one is going to be 92.53 instead of 95.84. So, and we'll just compare them. 92.53 once we have exited both positions, and the exit's going to be the same, 87.76. Actually, you know, some might even say, you know, they might make both the target and the exit based on the current price. And so one could do it that way too. Okay, we're putting this in our long call group. 1 ATR compared to same trade with the higher target. Okay, fire in the hole. Now somebody's asking a question about, well, you know, how much, you know, how much, you know, can I make on this? You know, what's the break even? Well, the break even is for it to go up as much as you paid for the call past the strike. That's going to be your break even. But when we want to be in this for such a short time, what some will do is they'll come over here and let's go back. Let's just look at our Microsoft trade. As an example. So our Microsoft, our target on this is 456.05. Just draw this on the chart. So we can put this on the chart too. So I just draw a line and then I come back in and edit it, 456.05. And this is our 1 ATR target. And then I say, show this on the right. So that when we look at the chart, if it gets up to 455.80, we may say, hey, we're close enough, we're just going to take it. But if we come to the trade tab, and it's currently trading at 446, so it has to go up almost $10 for us to hit our target. If we come to Theo price, and the first thing we're going to do is hit reset. And then it'll say, okay, today's the 9th. Let's say by Friday, by the 13th, it comes up by $10 a share. Like remember, in an average day, this thing can move $7.72. So now we'll see it's at 456. So if by Friday, this went up to by $10 a share from where it's currently trading, this would be worth about somewhere in the proximity of $9.30. And, you know, we paid, let's say we paid $5.40 for it. So if I take $9.30 minus $5.40, that's a $390 gain on a $540 investment. So we'd be up about 72%. Now, if it went down and hit our exit at 432, that's down $14. So if instead of going up by 10, it went down by 14 and hit our stop, and this is assuming that we don't adjust our exit, it'd be worth about $1.22. You know, so we'd have lost, what's that, 80%. Because, so with options, it cuts both ways, my friends. But this Theo price, I thought it was the coolest thing since sliced bread when I first saw it. And then I couldn't remember where to find it. So just to repeat, it's on the trade tab, and you come and you click on this and you choose Theo price, which brings up this bar, and then hit reset and then put in your numbers. And you can play with volatility on here, as well, but it's a cool feature, isn't it? Okay. And then somebody asked, how can you see a note on something you exited? And if you come to a trade that we have exited, so let's look at Reddit, because we just exited a trade on Reddit recently. You're going, well, how can I see the notes on this? Well, if you come up to the order history, if there was a note, you'll see a little box here. And so if we click on this box, it'll say, oh, this is a swing trade. We bought the call. We're going to compare it to the stock position. That was our goal. So that's how you can see those notes. And if it's a position that we're still in, like the ones that we did today, so here, when you come and look at the filled orders, you can see all of these have a note attached to them. Or if we look at the working orders for these, the closeouts on these, you can see that these have notes attached to them as well. Okay, so I hope I've answered those questions. If you're new to some of these things, if you go to that playlist, this trade management mini session playlist. So in the blue is example trading plans. Then the orange is, postmortems on trades that we've done, where we're comparing things or we're just reviewing. And then if you keep scrolling down, there's a whole bunch of mini sessions. Here's one on the monitor tab. And I did a whole one just on notes, on using notes, how to add them, how to see them. You can add a column in your monitor page, as AP 514 said. So this is just kind of a catch-all of short videos, and I put them into 3 categories so that if you want to, do some binge learning on Thinkorswim or binge learning on example trading plans, it's all there for you. Okay, so we did PayPal. What did we not do? Well, we didn't look at today. Let me just bring this up. I had Walmart on my list. So we may revisit this one later in the week, but it's pulling back today. So this was going to be one of those ones where we kind of fancied it up a bit or made it a little more complex, in that we were going to put in a conditional order to say only place this trade if Walmart goes back above today's high. And then if it goes above today's high, then the 1 ATR on it is $1.47. So get us in if it goes above today's high by, say, 50 cents, and then get us out if it goes up another $1.47. And then we would have had to put in our exit a bit later. Could we have done the same thing with Reddit? Oops. Yes, well, actually now Reddit's up on the day. But look at the range of that candle today. Holy spooks. Yeah. Okay. So guys, our time has come, our time has gone. I don't know if there is a survey in the chat. Connie, if there is, could you repost that, please? But my ask as we wrap things up today is, if you're not following Connie and I in the Land of X, I'd love for you to do so. Barb Armstrong CS and Connie Hill CS. We are, posting content that we think you will find helpful on a daily basis. Hit the like button. What that does is it allows you to do a favor for a random stranger that you may never meet without leaving your desk. And what it does is it helps move this up in the YouTube algorithm so more people can find us. It helps us out. And hopefully, if you found this valuable, you'd like to kind of pay it forward. So it lets Connie and I know you found this valuable, and it helps us reach more people. So that's hit the like, subscribe to the channel if you haven't done that already. You're off the hook. There is no survey today, but if you're watching this in the archives and there's content you'd like to see we haven't haven't covered recently, just put it in the comment section. And I do read those comments every day and respond back to them. I did about a dozen or so this morning. I've got one or two left, I think. But yes, so thank you so much for being here. Thanks to Connie for being so diligent in the chat. And thanks to each and every one of you for continuing to show up for yourselves, for your family, and for your financial future. I appreciate it. Up next, James Boyd with Technical Trading. I'm not sure I got the title exactly right, but when James is talking, you want to be listening, my friends, Mr. James Boyd. So have a great day, everyone. We'll see you in Getting Started with Options tomorrow at this same time. Bye for now.